In my previous video, the advantages of long-term investing were explained. Value investing is a popular long-term investing strategy. In value investing, our aim is to identify and buy shares of fundamentally strong companies that are available at discounted rate in the market. That is, the stock market is yet to identify value of those shares and hence their price are expected to rise further in the long run. Let's see how to identify fundamentally strong companies. Some of the features of such companies are: revenue and profit of the company should have a steady growth rate. Equity or net worth of the company should have a steady growth rate. Growth rates of revenue, profit and equity should be higher than the industry average. Debt should be low compared to equity of the company. Most importantly, management of the company should be honest and efficient. We are buying company shares based on the numbers given in the annual report of the company. We can believe the company's projected performance given in the annual report only if the management is honest. Next video onwards, I am starting a series of tutorials explaining how to identify fundamentally strong companies that are undervalued. We can buy company shares only after detailed analysis. If you see Sensex, there are more than 5,000 companies listed in stock market. It is not possible to analyze in detail all these companies. We have to shortlist the companies for detailed analysis. In first few videos, the shortlisting process will be explained. In these videos, I will explain how to find companies with good performance factors. This shortlisting process reduces the number of companies for detailed analysis from more than 5,000 to less than 100. Then we will move to detailed analysis. Here we have to learn how to read annual report of a company, how to assess three major tables given in annual report, namely profit and loss statement, balance sheet and cash flow statement, then how to assess the management, etc. After detailed analysis, we will have a complete understanding of a company, its growth prospects, criticalities, financial performance, usage of company's money by the management, etc. This knowledge will help you to decide whether to invest or not your hard-earned money in that company. Your job is not over once you bought shares of some companies. You should monitor stocks in your portfolio. Tracking of news about the company and its industry, studying financial results released by the companies, tracking the credit rating, etc. are some steps in monitoring the portfolio. So, my tutorial will be covering how to monitor our portfolio and when to sell the shares in hand. Please watch these tutorial videos as per the sequence of lesson numbers mentioned in the title to have better understanding.